Okay, what we would like to do in this video is talk about how you calculate the free cash flow for a corporation. And I have open here the spreadsheet for the free cash flow calculations. And if you remember, obviously the yellow boxes are for data. So what we want to do is find a real company. In this case, we're going to use the company that I use in my explanations, which is Molson Coors. And you want to get into that company's web page via Yahoo Finance. You can also do this through Zacks or anything that has financial statements. And at the bottom, you'll find income statement. And that's where we want to start with our analysis. So let's say, what items on this sheet are required from the income statement? So let's look here and see what we have. Again, if you look down here, we have the total revenues. We don't need revenues. What we need is net income. So net income is down here at the bottom. Here we have net income from continuing operations. You can see that there's not a lot of difference between the two. So let's just start with the one. All right, so we have net income is 514,123. All right. Non-cash expenses. So we're looking for things like depreciation. Well, depreciation isn't really found on the income statement. So we're going to have to find it here in a second when we go to the cash flow statement. So the next thing we need to know is something about taxes. Well, we can either calculate taxes or we can use the number that's provided. In this case, since it's provided to us, the income tax expense was $69,000. Now, you may have to do this calculation. So how would you do the calculation? Well, it's taxes is calculated from earnings before taxes. So you have EBIT minus the interest expense found below, and then you multiply that by the tax rate. In this case, for a company, might be 40%. That's the taxes. Net income is found, so you don't have to worry about that. So now let's go back up here and find EBIT, income from continuing operations. Let's go back up, make sure that we have the right line item, right where we need to be. Here are the operating expenses. Here's the operating income or loss. So that's 726, 500. 726,500. Now we go down. What's the current assets? Well, obviously let's go down here. We don't have any other. Well, we need interest expense. So interest expense is down here. So if we find in here, interest expense in the middle is 145,000. Oops, I got 145, 123. So there we go, $145,000. Now we need to go to the balance sheet. So again, scroll back over here to the left. Let's find the balance sheet. The first thing we need is we need to know something about asset investment for this category. So we need the beginning and ending current liabilities. So here's the beginning and ending. The beginning is up here is 2161,400. 2161,400. And it's 2325,300 is the ending current liabilities. Go to current assets. Go to current liabilities. They're right here below us, right? The current, here's the long-term liability change. Oops, and I guess I just screwed that up because I was doing current liability. So I'm sorry. Pretty easy to fix though. We're going to copy this down to here. My apologies. And we need to go up just a little bit higher to get current assets. There they are right there. So now let's move over a little bit more. My fault. So now we're going to plug those numbers in up here. So it's 1537, 700, 1578, 900. All right, now we got those straight. Now we need to go to fixed assets. We need to find the fixed assets of the company. So we go down just a little bit further in the spreadsheet. Scroll over here. Here's property and equipment. This is where we need it right here. So we'll do property and equipment. That's what we need. So it's in the beginning, property was 1970 100. In the end, 1798. There you go. Operating cash flow, if you know what this number is and a problem, you can certainly use that. Now we need to go down and find total equity. So now here's the stockholder equity. They give us those numbers. So total equity started out at 8605,200 and ended up at 7863,300. We need to find something out about dividends. We'll find that on another line item in the cash flow statement. We need the beginning and ending long-term debt. So up here we have long-term debt. It's right here. And again, in this particular instance, it's a little cloudy. Exactly what I mean. Some of these things are not really debt, right? Negative goodwill, minority, those things are not really debt. So we want the interest-bearing account. So really what we want here is the total of long-term debt and other long-term liabilities. So we want to add those things together. So for this, we're going to have to put an equation here. Equals 3213,000 plus 664,200. Then the other one is 2337,100 plus 663,500. Oops, I forgot the equal sign there, so let me get an equal sign up there. Don't forget that for your formulas. So there we are. The only two items we now need are the non-cash expenses and the dividends. So let's go over here and see if we can find those when we look for the cash flow statement. So we'll go to the cash flow statement. And the first place where we would find this is we need to find depreciation. So where's depreciation? Depreciation is right there. It's the second line item there. You can see that. So depreciation is $320,000. Oops, wrong line item. Up here. 320,000. And we have to go down here and find dividends. The dividends are listed right down below, and dividends paid were 277. Let me get back to that. Sorry about that. We need to go back over here. Oops. Enter. And for dividends, we enter 227,700. So that's all the data. So now, I guess the only thing we really didn't put here is 2014 for the year. And we go over here. Now we can find the statements. Cash flow after taxes is $834,000. Now we have to add 3 zeros, so it's millions. That's a number we'll ultimately use when we get to capital budgeting. The operating cash flow number, this company has created or generated $977,500 from running the company. Again, $1 million, not thousands. After they paid all the bills of running the company, they also have to make some short-term investments in accounts receivable, working capital. They have to make some long-term investments in fixed assets. And after they're done, the total free cash flow available for the company is $952,300. So that's the cash that's available to pay the investors of the company. So who are the investors? In this case, this $952,000 was distributed mostly to the creditors because there was a big decline in the amount of debt that they had. In addition to that, obviously, the cash flow of the shareholders received ultimately $94 million from this. So calculating the free cash flow is pretty simple if you have the financial statements. Every once in a while, there'll be a little trick that you might have to play, but in general, you'll be able to calculate and determine exactly what the free cash flows of the corporation will be.